Hey guys, welcome back to another video. This is Elson, the FX21 trader, and today I'll be taking you through another one. This is just one of the strategies that I use daily to do well in the market. Well, these are my principles right here, in case you didn't know. It's discipline, patience, and reward. Discipline, patience, and reward. If you're not disciplined enough, you will never make it in the market. And when you place a trade and you're not patient for your setup to play out, or you don't wait for your setup to play out and you just enter a trade anyhowly, you will definitely not make it in the market. And if you can do these two things right here, discipline and patience, you will see the reward of it all in the end as you continue trading consistently. Anyway, let's get into the video. So I wrote down a few things for you guys here. So this is all you need for this strategy. You need a point of interest. You need a draw on liquidity, market structure shift, and in a kill zone, you get your lower time frame entry. So if I can say more about this, a point of interest is just a point where you think the market will reverse from potentially. Once price reaches your point of interest, you should start seeing if you are bullish at your point when price reaches your point of interest, it should turn bearish. If you are bearish and price reaches your point of interest, it should turn bullish until it reaches your draw on liquidity. But before it does that, once it reaches your point of interest, it has to show that it's shifting market structure from bullish to bearish or from bearish to bullish. I hope I'm not moving too fast here. So an example is this right here on USDCHF. This actually was one of the setups that I sent here last week. So potentially this is what we selected as our POI. In ICT we use PD arrays, and this was an order block right here. Let me type this in. Order block, let me just write it as an abbreviation as OB, a +1, since it took price upwards. So once price hit this order block right here, took out liquidity. Once price hit this order block, are you seeing how it reversed? Sorry, how it rejected. This shows that it's a strong point of interest. So how do we know that now, yes, we are going to continue lower, so we're going to continue higher? Is we want to see bullish PD arrays holding price and bearish PD arrays rejecting, being disrespected. So any bearish PD array, we want to see it being disrespected. For example, this fair value gap right here, this would be my point of validation to know that we are now bullish. As you can see right there, we want to see a closure above. This was what we would call our market structure shift in this sense. Once price closed above here, then automatically we know that we are going to continue upwards to take out all this liquidity above. So this would be our draw on liquidity right here. This is our nearest low hanging fruit. This is our drawn liquidity. This is our drawn liquidity. This is yet where I expect price to reach. Hopefully by the end of Friday we would have reached there, though there is no news, so I'm not sure about that. But once price closed above this fair value gap here, it became an inversion. It inverted it. So we used the same fair value gap to go higher. So once price comes back to this fair value gap, we expect prices to go higher. So now that we have our point of interest and we know it has been rejected, we have had our market structure shift. We know our draw on liquidity right here. We know our draw on liquidity. We know what our draw on liquidity is. And we now look for a lower time frame entry in a kill zone. That is very important, in a kill zone. If it's not in a kill zone, do not take it. We have had our market structure shift right here. Let me write it here so that you can see clearly. We have had our market structure shift right here. This is our market structure shift from this inverted fair value gap, or BC or CB, whatever you want to call it. So now we go to our lower time frame. So let me give you something. I wouldn't want to share a lot in one video, but I might have to. So we're on the daily currently. Where we have got our bias from. So we are going to get our setup from the 1 hour, and finally we shall enter on the 5 or 15 minute. I hope we're clear on that. We are on the daily, so we shall move down to the 1 hour, and finally we shall enter on the 15 or 5 minute, depending on where it looks more favorable to enter from. So we want to enter on a day that has news. I don't want to make this video long, so I won't go into details on why I'm not going to take this trade on Wednesday, because there wasn't news that would have made this market go higher. There was news on Thursday, and the market opens at midnight as always, as you know. After midnight. So I would take this trade potentially on a Thursday. Wednesday had a lot of choppy price, as you can see, though you would have got an entry right here on this fair value gap, but I don't like taking trades on days that are not favorable, so this wouldn't be favorable for me. So once price came into this fair value gap, it couldn't go back, can't come back again and take this out, or it may, but it won't go very lower than this. So what we did was, this became our order block right here. If you can see, I would call this my order block because it took out liquidity right here. It took out session liquidity, if you can see right here. This is the lunch hour section liquidity. As you can see, the lunch hour begins at 1, so this liquidity was taken out. So we went higher and came back to the order block. As you can see, price respected the consequent encroachment. That's the middle of this order block. And at what time was this? During the London kill zone. So we would drop down to our 15 minutes. If you can see very well, we drop down to our 15 minutes. Potentially right here, I do not see where I can enter from very well. But if you see right here, after this liquidity was taken out, we have this inversion that was disrespected. These are my two entries that I usually take. Either break a block, fair value gap, or order block, or an inversion, whichever presents itself. In this, you can enter directly right here in the middle of this when it's consequent encroachment, and your stop loss would be below this low, which is Wednesday's low. And immediately you see price went higher. So this was our first draw on liquidity. If you can see right here, this was our first draw on liquidity. Our second draw of liquidity has not yet been reached, but potentially it looks like price will reach there anytime today or next week. But look at this. If you always take your trades in a kill zone, you will always get out of your trades fast enough. Look at this. This was, you went, yes, you do go into drawdown. This was a London session. The London session starts at 2 to 5, and before the session closed, you're already out of the market. If you can see right here. Before the London session ends, you're already out of the market, because you do not even need a lot of pips for a day trader. For a day trade, this is very much enough. Making a 1% or a 2% on whichever account that you have, that is enough for you. As you can see right here, this is a 1 to 4 risk to reward. But that doesn't matter if you cannot be patient, disciplined, for you to wait for this reward to come to you. You don't have to be trading every day to get from the market. All you need is one setup, or if it's all well and you get 2 setups, then that is even all that much better. But one setup is enough for you in a week. As you can see right here, if you are just to wait for this to show you, the market to show you where it's headed, and for you to wait for this and just enter right here, this would be enough for you for the whole week. 64 pips is enough for you if you just plan your trade and trade your plan very well. So that is one of my strategies that you will ever need. Follow, like, and subscribe to my channel, the FX21 Trader. My name is Elson, and thank you for watching. Post in the comments what I should do a video on next, and I'll see you in the next video. Ciao.